Good evening, dear colleagues. As always, Sunday as always afternoon ForexTimes project. And as always, let's consider the probable movement of trading instruments for the upcoming trading week. And we start with the euro versus the US dollar. That one of the commentators on YouTube wrote that, well, since everyone predicting Joe, so it should be to sell, and he was right. During the trading week, the euro did indeed, despite the increase in buyers and an uptrend, according to reports from the Commodity Futures Trading Commission. Commodity Futures Trading Commission reports this trading instrument fell by a little over 100 pips, however, in it with trading Forex time signals. I gave a buy signal, which was due to, first of all, of course, the increase in buying during the trading week, according to reports Commodity Futures Trading Commission reports decrease on this background of the trading instrument. The banking day Wednesday did nothing to change the situation we reached. Friday, there was updating. The minimum values on Donkey CD divergence appeared. You're seeing it right now at the moment. You can see it right now. And I thought about the fact that we have Friday, which is quite often fixing positions before the weekend speculators' days off. Secondly, we have a divergence, and thirdly, we have an increased buyers and an uptrend. We could find a pattern to enter the market. I found it on the time frame H1. It was a pin bar that was located inside the past fall for an hour. A buy signal was given with a stop loss. 50 pips after the price passed, 40 pips in profit. The stop loss was moved to break even, and literally 2 hours later, the position was closed at zeros. Yes, unfortunately, we did not manage to catch the impulse buying movement, but that's okay. The main thing is that we didn't got a minus, and attempts are always, you should always try to realize when you have a few patterns that coincide with each other. It was Friday, and a permanent weekly decline, a buying spree, and an uptrend and a divergence all overlapping. An attempt was made, but it's nothing. It's okay. We're going to have a lot of them, and let's see what we're most likely to happen in the coming trading week. And in the coming trading week, again, we see an increase in buyers, only not by 0%, of course, but by about 0.4 to 0.5%. 0.5%. I just don't have anything less than 1 doesn't register, actually 0.504. But the most important thing is that against the background of the market, that is a decrease in the price of the value of this trading instrument from Tuesday to Tuesday, according to the Trading Commission, Commodity Futures Trading Commission. I apologize, it's already evening already. There's talk that amid the decline of the trading instrument, the buyers of the sun equal to DDT, we see an uptrend. So you and I have two options for the upcoming trading week. For the coming trading week, first of all, yes, by the way, it's worth mentioning and considering a more global time frame like this one. We have two variants of development of events globally, dear colleagues. Either we see an impulsive movement after which, and the correctional plane ABC continuation of growth on the impulse. And now we're in a correction ABC, you see, ABC key wave B. This is the first option, and the second, we also have an impulse movement, but after the impulse movement we have a triangle. A C, since triangle A, you know it, is the penultimate wave we have last wave after, pardon me, curve after. And then we have an impulsive move down in wave, and the corrective movement B in wave C is developing now. After that, of course, globally, in a month and a half, you will be buying, but pay attention. There is also this wave here, the key one I'm talking about. Look, we have two different options, and both one down and one up provide for this wave. What is this wave? 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 What is this actually a wave? What we have is a wave. Let's say wave A or aha. I apologize again, it's already evening and I'm tired. Wave A or wave O is not enough for us. Wave B or wave 2, then either if it's option number 1 or option number 2, absolutely it doesn't matter, we still have wave C or wave 3, and only after that, either 4 and 5 down or a reversal up to wave 1. Our job with you is to try to work it out for itchy hands right from the opening session. From the opening of the session, you can consider buying to catch both wave B and then wave C. Whoever's itching are not itchy. I recommend waiting for something or a continuation of another decline within wave A into the strongest support range to the level, but 6,450. We are already considering buying in wave B or Monday, Tuesday. The first half of Wednesday, the market is growing in corrective movement into the range of 50%, 61.8 in wave A of the Fibonacci grid, and from here, either we consider selling in wave C or place pending orders under the base of wave, a BZB under the base of wave C of the lower of wave B of higher order. In this way, I assume that this trading instrument will work out for the next week or even 2 weeks. Gold by gold last weekend, I talked about the level 21. I think I even said something to the effect that we can't even guess at the level. We'll work it out for the simple reason that there's a very strong resistance range. There's a huge number of options, the state contracts were thrown by professionals, and with these contracts, they're hijacking their futures trades to sell, and then there was a reaction and the market went down. What to expect on, let's see globally what we have globally. Dear colleagues, we have a movement in momentum after which we have a big enough correction about this correction. We have been talking with you. We have been talking for 6 months. It has passed, and the CW then started to rise sharply, and that's the problem with this growth. We have wave 1, 2, 3, 4, wave 1, 2, 3, 4. Then the problem is that wave 4 covered the maximum of the first, and it's a 5-wave wave. Colleagues, right away, what concerns here? 5-wave structure possible. Immediately, this disappears. What can be left? What can be here? Theoretically, here can be a 3-wave structure, ABC, ABC, with point X. And now we go to 1, 2, 3, 4, 5 into wave Y. For those who bought without a stop loss, this could be very painful, very, very painful. Let's take a look. It's not this way, it's this way. Yeah, well, here we may have here we may still have the end diagonal develop like this, in this way. Yes, absolutely correct. 1, 2, 3, 4, 5 times 2, 3D, 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 3, exit down in any case. Please see if the first variant that I've shown are the Ryan. It's missing the downward move. Now let's open H4 and see what we have here. Probably even H1 will be easier. Yes, to look at the wave structure. The wave structure is more likely to be most likely an impulse wave A, a small wave B, and now we are in wave 2, 3, 3, 4 not. Lacking wave 5 to finish this wave, to finish with, if dear colleagues, this is option number 2 with diagonal triangle. This wave with theoretically still not enough because there is most likely, well, although wave C may be enough. But usually, yes. At the moment, if the decline continues on, the H4 continues to decline on the weekly time frame, we don't see a 3-wave structure. So if we want a 3-wave structure, and here it's either a 3-wave structure or according to the variant. Number 1 wave will be like this one, 2, 3, 4, 5 in the wave Y. Therefore, we don't see this wave. This is the wave we're going to work with. We will work with this wave. How at the moment, if suddenly the price on Monday, Tuesday, and Wednesday a little bit decreases, and after that we will see growth, then we will make a decision to enter the market to sell from the range of 50%, 61.8 Fibonacci, either AC or below the base of wave C with a pending sell order. Except either Monday, Tuesday, Wednesday, the price, I don't know how to say this in a jerk, is going to turn around and go up on the obvious. Of interest, it's going to be obviously corrective again. Out of the 50%, 61.8 Fibonacci range, either below the base of wave C, we sell like this. This is how we work on gold. Dear colleagues, buy here, in no way. In any case, you can't sell. Especially you can't buy because we don't know where the continuation will end. Where will the continuation of the impulse decline? And you can't sell because, yes, indeed, the price could go right up right now at any time upwards for the simple reason that the price is already as close as possible to the strongest support range. Although it's worth saying that the strongest resistance range is also very, very close. And Dow Jones, which I've already pissed off absolutely everyone, but dear colleagues, believe me, I will continue this indefinitely, that the level 31000 Dow Jones is our target level. And the fact that now there is growth, and we see a supposedly impulsive growth, this means practically nothing for the simple reason that I can easily to draw here the three wave formations by which we're going to have a terminal wave, for example, a plane or a finite wave correction, or I can do the whole thing depicted as a probable diagonal, and why not? Just not as probable somehow. Yeah. And why don't I represent here some diagonal, again, a diagonal triangle, which here I can't draw a three-wave formation. I can't draw it, but believe me, sometimes. You can take a big owl and put it on a giant globe. I'm very good with owls. I'm just talking about what's going on in the financial markets and what the financial markets are the financial markets at the moment. I'm focused on the informativeness of the professional members of the Chicago Mercantile Exchange who, even after the expiration of a month's option contracts on the trading on the instrument, wrote their expectations up. They left their options contract stakes that are currently in the market with maximum open interest is at 34,000, which indicates that they are expecting the trading instrument to decline minimum to the level of, I believe there will be a movement like this soon, and it will continue to the level 31.000. Dear colleagues, I'm begging you, I beg you on your knees to trade. Please trade in the market exclusively on patterns. Not just you see the level from this level, you have to do something from this level. Maybe you should do something. But only if you have any pattern. I use pin bank divergence, all the impulses I see in the market. If unless the impulse in question is a finite plane wave, because a finite plane wave is a deception, because the plane, I'll draw you how it happens. A plane can quite often be composed in this image, waves up, then three waves down, updating the minimum value, and then three waves up, so we have three. Well, or let's image 33335 or AC can be depicted, it's actually like somewhere disappeared. Yes, as you wish, you like, and a lot of traders confuse this. This five-wave impulse with the impulse, the beginning of the movement, in fact, always, you have to look at the context of what we have. We have before this momentum, and if before the impulse we had a correction, before the correction there was another correction, you have to think very hard about what kind of figure, so the planes, be very careful. Why did I say almost all impulsive motion in the plane, of course, ignored? Well, dear colleagues, thank you very much. It's been a long time. Something by the evening I'm quite tongue-tied, I can't keep up. Let's try to work with you after all the euro, because the euro is potentially a convenient trading instrument to work out in the coming trading week on gold. Unfortunately, we can only to observe now, and it makes no sense to enter the NOC. There is no sense, no Jones, strategically smart to sell at investment-wise strategic level 31. Thank you very much, dear colleagues. Come to Community Forex Times channel with trading signals, daily forecasts on 9 trading instruments. Of course, there is chat where you can discuss this or that trading instrument, and also forecasts from the section Look into the Future, where I write forecasts with strategic ones, working out of certain levels, for example, on dollar franc, on dollar Canadians, on the Dow Jones index on gas, and on the dollar against the Japanese yen. There are strategic levels to be worked out within 12 months. They can be worked out at a risk of 1% of the account balance. You can to take about 80 dashes, 100% of your balance here from 10 to 12 months. Very good strategic, competent forecasts, competent targets, smart market entries. Thank you all. Thank you. Dan Shooter. Have a great evening. Bye-bye.